Good morning. It's Friday, the 19th of September. Welcome to Trade Live with IG, with myself, Rich McDonald. And who's this sitting across the desk from me?
Hey, you know what? Not all heroes wear capes. When Rich came running in across, crying, begging, snot running, please.
Angeline's not here.
Exactly. I gladly stepped up.
So we're lucky we got Ronnie just to sign on the dotted line, just as Angeline was walking in.
And hopefully the people at home can forgive my rough appearance. I wasn't expecting to be on live TV.
The last minute substitute. Good morning, everybody. Boise. Boom. Boise had the intel. Who else had intel for the 22% move yesterday? Piers didn't. I didn't.
I'm a big Intel hater.
Oh, really?
Yeah. I've left Aries. Lefty, as he's known on the desk, has told me to get on Intel for a long time, and I said it's a piece of rubbish. The only good thing that would happen with that company is if they get bought up, and that happened. Well, invested
via the government, via SoftBank, via NVIDIA. So yeah, nice. Poppy, good morning to you. Poppy leading me astray yesterday. So of course, yesterday I was recording the podcast with CJ and
Did you see
Spice.
Boise's comment?
Ronnie got a fresh perm.
Now you're making me self-conscious, Boise.
We'll get some gel in it at the break, don't worry. So yes, we record the podcast from 11 till 12 in a secret location. And then the gents, Spice and CJ, then had a lunch, and it's called the Guru's Lunch. Now, these are 4 or 5 of them that get together once a month, and one of them used to work in the Treasury. One worked for BlackRock. Of course, we know the guy's pedigree already. So some really, really smart people sitting around the table, and then me.
And then you.
So I was just there to pour the drinks.
Good lads. At least you know your place.
Yeah, exactly. So yeah, really nice afternoon yesterday with those gents, and then fresh in for Friday. So are we looking forward to the weekend? That'll get us taken off YouTube, won't it?
Yeah, that's
Copyright.
licensing.
So yeah, on Fridays down in Johannesburg on the trading floor, then at 4 p.m. the Johannesburg Stock Exchange would close. So I used to piss off everybody in London by playing that through the hoot. So it would come out all the speakers in London while the London market was still open every Friday without fail.
But the question now is, Rich, I saw that Sadiq Khan was uninvited to the banquet at Windsor Castle.
Really?
Did you get an invite?
Well, I didn't get an invite, but apparently Angeline's friends spotted Jensen Huang in Chinatown last night and got a picture with him.
Oh, wow.
So Angeline is trying to get him on the show for later. That's why she's late in this morning.
Yeah.
Her people are speaking to Jensen's people.
Right. And her people being producer Phil.
She's got better people than that.
Oi!
All right, what's coming up on today's show then? It's Friday, the 19th of September. We've got Ronnie through to 8:15, and then Joe is here, Joe Clement, Panmure Liberum's finest, in speaking to Angeline for half an hour, and then myself for a quick 10 minutes, so him and I can run through what on earth just happened in the Federal Reserve a couple of nights ago. 9 a.m, all sessions opening bell with Angeline, and then Bill Blaine is here with his morning porridge. So we got the real 2 experts on this morning, and Ronnie.
Okay.
And then at 9:35?
At 9:35, we got Commodity Corner with John Mayer. Not to be confused with John Mayer, the artist.
I knew I recognized the name from somewhere.
Yeah, exactly. But you guys are doing a little triplet there.
Okay, so do you want to... Yeah, we got quite a lot to talk about, actually. We got to talk about Bank of England yesterday, and then going into the... let's go into some overnight action. Right, how are you all doing then? Steve Davies tuning in, caught short, is long some Palantir by the looks of it. We're getting rocket ships up there and everything to the moon. But yeah,
How's
first
your
of all,
Palantir short doing?
well, beautiful. But I'm also now I'm short the puts as well, so I actually don't want it to go down much more.
You just want one of the most volatile stocks to stay with.
Sideways.
Yeah.
It's exactly, which is it's all right so far. But we got to talk about what is going on in this country. Has everybody seen the 7 o'clock figures? So on the Friday morning, we see that public sector net borrowing figure come out. If you're wondering why cable has taken a dive bomb, it's because last month we borrowed 2.8 billion. We were meant to borrow 12 this month in August, just gone, and we borrowed 18 billion.
Which is now our fiscal hole, which is excellent. Excellent. Yeah, I mean, I'm very positive about the outlook of the UK. Started off with a $2 billion hole. Now it's 18. We're definitely moving in the right direction. I'm happy about it. Yeah, I think this is breeding good confidence, and retail sales are all figures all looking brilliant.
So there you can see, look at that cable. It's just gone through 135.
Oh, look at that P&L, baby.
Oh, that P&L's ratcheting up there. It's not the only one though. I think there's one from lower. Is there somewhere? Ah, there.
Oh,
look at that. How about that for a sale?
That is a nice one, Rich.
So yeah, I spent we got a story actually coming up on the podcast that I might actually front run a little bit. So Federal Reserve is obviously a big trading occasion for people. Mm-hmm. Right now, I sat at Brevin when I was there 3 years, and it was I think October 07 meeting. Right, so big meeting right at the start of the financial crisis. Big question, were they going to cut rates or what was going to happen? So I sat and I traded for 2.5 hours, 3 hours, non-stop, buying, selling futures. The market didn't know which way it was going to go. You know, I was trying to like nick a few points here and there. So anyway, it must have done 1,000 trades, right, between 7 p.m. Oh, it used to come out at 6:30, so it'd be 6:30 and 9:30. Next morning, I come in. Now, my risk limit, I could never be longer or shorter than $50 million because my book was 100, right? So I had very strict risk limits. Come in the next morning, boss says, Rich, can you just come into the room, please? Walk into the room. And there was somebody from risk sitting there, the head of risk.
Ooh.
At a $20 billion hedge fund. You know, that's not what you want to see on a Thursday morning. So we sit down and I say, Rich, are you aware of what your risk limits are? I say, yeah, 50 million. He goes, okay, so can you just explain to me yesterday why you went 10 times over your risk limit? You were long $500 million of futures.
Bloody hell, Rich.
Now, I knew my book, right? And I'm starting to think, oh my God, did I get the multiplier wrong? Was I trading maxi S&Ps, not mini S&Ps? You know, I'm kind of panicking. But then I go, hang on, my P&L, I made $50,000 the whole night. There's no way I could have been long $500 million, right? Because that's like one tick.
Yeah.
So I said, sorry, can you just show me the trades? He went, yeah, look at all these. You bought them all and then you sold them all. The way the middle office guy had come into the office the next morning, he had just seen 1,000 trades, gone, Rich, for goodness sake, booked all the buys in a row and then booked all the sells, which hit the risk limit.
It took your full total exposure and not the actual in the middle.
So, because, you know, he was booking it sort of 6 in 1 second, 2 seconds, 3 seconds, 4 seconds. Anyway, so yeah, that was that. Wednesday night just gone felt a little bit like that because, of course, the market didn't know what to do. The market went higher. As we said in the show in the morning, it's probably going to go higher, and then you sell it.
Yeah.
It looked perfect until about halfway through the press conference, it bottomed and then started to rally again. And it's rallied since, hasn't it?
It has.
Did you see much on yesterday on the desk with people trading it?
We did see a bit of an uptick actually in client trades. So Monday to Wednesday was quite calm. Phone wasn't ringing very much.
Yeah.
Not a lot of trades going on. Then, so Wednesday, Thursday, it was quite active. Phones were ringing quite intensely.
Let's take a look at where we've been with this S&P then. So the number came out. Let's see. Oh, that's Thursday. I thought that looked wrong. There we go. There is the start of it, and then we peaked at 66.24, and then we dropped all the way down to 65.50, and there was a lot of support there. Then rallied back, and we're there and thereabouts. We're 7 points higher than the peak we reached on the Fed announcement. So yeah, market doesn't really know what to do, does it?
But that seems to be the sort of ongoing theme this year, right? Because there's always some sort of overlapping risk that's looming over everyone, whether it be, a Trump announcement with tariff, whether it be the Fed cutting, not cutting, or geopolitical risk. There's always some overlapping risk that's making everyone sort of sit on the sidelines and, to quote you, say risk off.
Yeah, and especially because the market's just too expensive, the general market. So this was the winner. This was the big winner, and that's the Russell 2000. So you can see there the move. It tried to go higher on the Wednesday night, and it came all the way back. But then it went right through to new highs yesterday. So I'll just do a quick review of what I've done on the book. Unfortunately, I didn't have any intel, as I said. What I've got instead is, where are we? Well, what I've got is too many positions to start with. So we've got some long sum Russell, long sum home builders, including Home Depot, and then long a bit of the regional banks. So this regional banks trade has been beautiful. However, I don't want to be too long. So I also shorted the big boy banks, the XLF. So I'm long 30,000, I was going to say million, $30,000 of regional banks and short 20,000 of the XLF. And then I'm also short a bit of Goldman's as well. And that hasn't gone well.
Well, I think you should play the tape from our show. Was it on Tuesday? Wednesday, yeah. When I said that Russell 2000 would be a good choice.
And knocked it out of the park, you did. Gosh. Knocked it out of the park.
I have some feedback for the producers back home. So I was spending the evening yesterday with my lovely, wonderful girlfriend.
Your wife?
Yes, hopefully soon. And we were watching Real Housewives of...
Sorry, you had everybody there. We all felt for you.
Yeah. We were watching Real Housewives of one of these cities. So I was... brilliant. And the feature that they have is whenever someone says something that's a bit controversial, like, oh, I never said that or whatever, or I said that, the producers are very good in editing in this sort of clip, running the replay of when they actually did say that. So I want producer Phil to do the same for us.
Yeah.
That's producer Phil is finding excuses in my ear, but
yeah, boy, see what happened to my Intel options. So I have taken quite a lot of risk off on my tasty. It had a really good run, including that MongoDB or whatever it was called. And unfortunately, I took my Intel options off. Piers sold his Intel 2 days ago.
Oh.
How painful is that before a 22% move? But Boise didn't. Boise didn't sell any of them. He has got, not only has he got call options up to $32, he's got the 33 calls as well. So he absolutely smashed it out the park yesterday.
Very true.
Well done, boys.
You got call options at 32.
He's got call options from here up to 32.
Okay.
But then he's also got $33 calls.
That is okay. Well, hats
off. Nice. Okay, right. Well, we touched on what was going on with the borrowing. That takes us on to what the Bank of England did yesterday. Now, Bank of England had to be a little bit more hawkish than our friends across the water there. In fact, Andrew Bailey saying that the pace of future cuts is now uncertain. And it's uncertain because, of course, we've got higher inflation, we've got stickier inflation. But we did get some a slowing of QT.
Exactly. I mean, I'm not envious of the guy. Like, his job is so difficult because on the one hand, like you said, we got higher inflation, we got stickier inflation than the US, but we also have slower growth, lower productivity, and weaker consumer than the US. Yeah. So it's like, do you stay at 4%? Do you cut to stimulate, or and let inflation run havoc? What are you actually doing? It's an extremely difficult situation to be in because the UK economy is in such a difficult situation. I mean, Trump is obviously saving us now with the 250 billion pound tech deal.
Saving Starmer.
Saving Starmer.
Let's look at the chart of global interest rates there. So Eurozone, yeah, look at them.
The Eurozone really smashed it.
Yeah.
They're down stable now, 2%. They've beat inflation. And
is it because it's so bad, though, rather than they're not, I wouldn't say they've smashed it as in they just cannot get their economy going is the problem.
They cannot get their economy going, but it's not overheating with consistent inflation, and that's remaining high.
25% youth unemployment kind of helps not get inflation going. But yeah, the problem is now, of course, US. Now that
about China, man.
Now that Trump controls monetary policy in the US, that yellow line is going to move down quickly towards 3%, whereas we can't. So my question to the gurus yesterday was, look, how much does currency depend on relative interest rates, and how much of it depends on the shit show that's going on with the borrowing, with the mess that Rachel Reeves is in. And of course, CJ is the man to ask on that. And he said, look, 95% of the time, it is the relative interest rates. So that would suggest that cable has strength. Okay, because of course, with the US going down to 3% on this chart and us staying at 4%, cable should go stronger. He said, however, there is a chance in the budget, if they get the budget wrong, we're in that 5% of the time.
Which they most likely will.
Which all the evidence would suggest that Rachel from accounts is really going to have a tricky day that day.
Rachel from accounts. Rich, if I make you BOE governor, what are you doing?
Well, we had that exact
okay, tune in to the Art of Investing to find out the answer.
Well, no, we had to, at lunch. We are going to move on to that nearer the budget. But let's ask, what would people at home do?
Producer Phil, it's time for a poll.
It's time for a poll. That means you've got to come up with two suggestions and I'll come up with two.
Okay, so I would say, one option is obviously only time will tell.
So what would you do in the budget? Just giving them time to type.
Okay. Cut 0.5%. Oh, are we talking about the budget? I thought we were talking about the BOE.
No, it's only in America that the White House controls the monetary policy.
Okay, but I thought we were doing a poll on what we would do if you were the BOE governor.
All right. Would you do a wealth tax? Would you cut welfare, which of course they failed to do already? Mm-hmm. Would you increase borrowing? So you do away with Rachel's rules? Or you can let us know in the chat what the other thing would be. Now, wealth tax, that could be a property tax. Would you increase income tax? So, is it a wealth tax? Is it a Do away with welfare. No, the income tax brackets isn't going to do anything.
Yeah, I think we need to cut. I think we need to tax the poor.
No, we already do that.
Tax the poor, make it easier for the rich to buy a second property, so they can hire the poor, so they can work in those. Basically, trickle down economics. That's what I'm saying. It worked so great in the U.S. No inequality there. So make that an option, producer Phil. Trickle down economics on steroids.
Stephen Moore, what would you do if you were Rachel Reeves? Look for another job. Very good. Right, okay, so we'll get that poll up soon. Andrew McKelvey, we don't want to start talking about that.
Don't talk about that.
The only rule of Fight Club
Never talk about Fight Club.
is don't tax it. Okay, shall we do front page of the Times? Front page of the Times is talking about Rachel Reeves again. So Lord Wolfson of Aspley Guys, i.e. the boss of Next, took a bit of a hit yesterday in his stock, but he is saying that her policies are really hurting economic growth. I don't think many people are arguing with that.
Did you guys discuss yesterday Oracle buying TikTok?
Well, Oracle.
And the consortium, Oracle, so Oracle, A16Z and Silver Lake getting together and buying TikTok, ByteDance, for pennies on the dollar.
Brilliant.
They bought it for 5x revenue.
As a proud Oracle shareholder, I'm very happy with the deal.
I've been an Oracle shareholder for 2 days now.
Yeah, I'm going to go to the AGM, do a Gordon Gekko with a microphone.
But that's the deal that they get to get the exposure there, and also they're going to be able to house all the data and infrastructure as well. It's such a great deal for Oracle. And they get it so cheap. Like, I mean, just to put in perspective, they buy it for like between 35 to 40 billion. And it's...
Well, the US part of it.
The US part of it. But the entity is valued to around 400 billion. Oof, Madon.
That's what happens if you're in bed with Trump. And no, we do. Actually, the Tempest is talking about the man in bed with Trump, Larry Ellison. Oracle still a buy? And that is what we're about to see on screen. So the Texas-based computer software company is on a roll, but could be vulnerable when the artificial intelligence frenzy subsides. I mean, it's only just beginning. I'm not sure what Patrick Hosking is talking about there, but he goes through all the pluses and negatives for owning Oracle. There it is. Looks big on the chart there, but that only takes in year to date. And there's Oracle sales, but of course that is about to really jump higher in 2026 and 2027. And let's see what his... Oh, it's quite a long one. Advice, avoid. Whoa, you don't see that often in Tempest. Let's come back to that when the stock's $350.
Yeah, take a screenshot of this, email it to him.
And look at his justification. Strong company, vulnerable to a sell-off when the AI frenzy subsides. I'm sorry, but if the AI frenzy subsides, then the market's down 25%.
You got bigger issues than your Oracle holdings.
Yes.
No, I think this is a horrible take. I mean, if the guy actually knew anything about stock picking, he'd be here sitting here with us, right?
Exactly.
That's all I'm saying. But no, I mean, look at what he's saying. Sticky customers. They've got the biggest customers in the world. They're benefiting from the AI frenzy. They're benefiting from the infrastructure. They're benefiting from cloud development. So Oracle as a company is incredibly important. for the global technological infrastructure, the entire US government sort of software is running on Oracle software. So they're not going to go anywhere. They've got the stable base of cash flow, and they're going to continue to build upon that to make additional investments, to be better positioned, to benefit more from the cloud and the AI spending. Larry Ellison, and also
it's fast become one of my favorite stocks.
Agreed. And what's interesting about them is how much Oracle stock Larry Ellison has bought like throughout the years. He's just continuously, like, he sold off a bunch, obviously, when they IPO'd, and then he's just bought back every year because he's such a confident believer in the company. And I think that tells you everything you need to know.
Yeah. Now, talking about great companies, we have got Arctic Senna spotted it first. We've got Vodafone to acquire Telecom Romania assets for 30 million. So a story out there in Vodafone won't move the needle too much. But what are we thinking here? Well, the stock now is 84, so it has come off a bit. Remember, I started selling these at the 87 level, 88, just taking some money off the table, but I would be happy to get back in around 82. But yeah, it's still steady. You're still clipping your dividends, but with that big increase, maybe ahead of too much good news. You know, they haven't come up, produced the goods yet. So let's just let it come off some more.
All of that is super interesting, Rich. Thank you so much for sharing. Can I get the chart up on my computer here? You love a buyback? Have a look at this, my friend. Larry Ellison, king of buyback.
Nice.
Ellison's ownership in Oracle as a percentage of total shares outstanding has gone from 25 to 41%.
Incredible.
And they've reduced the number of outstanding shares by half since 2004. They've simply just continued to buy back. The stock has been so undervalued.
Is this why Elon came out with his $1 billion buy of Tesla?
He probably saw this post.
Yeah.
I sent it to him. I was like, mate, look what these guys are doing.
Because Larry was the richest man in the world. He stole it from Elon for about 20 minutes.
Oh, did he?
Yeah. Okay, let's very quick guess the chart coming up. Phil's having a panic because he's got a good song. So let's go. It is a US stock. It's Oracle. Let's go.
Won't stop, he's clicking all day. Short then long then fade away. Angel smile, she's playing it cool. Says I watch the moves, let you play the fool. Dom's on comms and Cam's on shot. Terrence says cut when it's getting hot. Rich is chasing every move on screen. From BP's rise to Tesco's green. Ancient's back with a steady style. She's not in the trade, but she's watching the
Boom, Julian nailed it. Absolutely smashed it. Is that the first one you've won, Julian? He won yesterday. Oh, sorry. God, 2 in a row. God, you'd probably get a prize for 3 in a row, don't you?
Well, Hamish will be getting...
Right, we've decided we're not opening the market today unless you give us a like underneath. So hit that thumbs up button and we've got 15 seconds. If I don't see 15 likes, we're not opening the stock exchange today.
London Stock Exchange has given us permission as part of our partnership.
To put it on pause.
Yes.
Are we ready? How many have we got, producer Phil? Go on, hit that like button.
British American Tobacco.
I've taken the tape off. You put the tape on.
Yeah,
I
could tell a difference.
Right, so we are off and running. It's Friday, the 19th of September. What is leading the charge? It's Bellway, it's Prudential. Lloyd's up small. Lloyd's back up to 84 pence. Do we have anything more, Ronnie?
Lloyd's is interesting because they were really struggling to break through the 80 barrier. They broke through that, and now they seem to have found a new resistance level. They used to be at 78, but now I feel like they found a new resistance level, 82.
Well, because the Rachel Reeves story took them down to 78 pence, didn't it?
But the good old Lloyd would bounce down to 62.
Yeah, true.
From that, but they came back, which is impressive. Fresnillo, Bellway, Rolls-Royce. I love Rolls-Royce. It's such a great company.
Well, certainly a friend of the show, isn't it? A lot of our viewers done well there. So, on the downside, though, Burberry, she's gone. As soon as Melania was back on the jet, then Burberry has lost its shine again, of
But
course.
they're back in the FTSE 100 now, aren't they?
Oh, are they?
Or
Have they taken
250.
our spot?
I think so. I'll get back to you on that one.
Yeah. Yep. We've got WPP 377. Now, update on that, Ronnie. It tried to rally because you, of course, think this is going to zero.
Yeah.
And where... Yeah, look at that. It tried to rally up to £4 and it's back again. Market certainly siding with you on this one.
That's what I'm saying. I think I should get a watch list of just like companies going to zero. So we got Ronnie's death list is what we're going to call it. And it's going to be WPP,
Yeah.
JD Sports, Diageo, and sorry, what did you say, Phil? Ralph Lauren, because Rich is wearing them. That's horrendous publicity.
Let's have a look at the chart of that, shall we?
That's like when Gucci sent Snooki from Jersey Shore bags to wear as she was getting drunk and arrested.
Right, over in Europe, Stellantis heading the market there. Airbus, BNP Paribas, SocGen on the upside. On the downside, ASML down all the way to 786. That thing just keeps on going. Unbelievable.
Yeah.
What an opportunity to buy that at 590.
It was, right? That's what I said. If you love your grandchildren.
Yeah, you did. You did say that.
Run the tape. Rich, Nestle, are you any interest?
No.
Yeah, I agreed. We talked about it the other day. I think it's just going to keep going slowly downwards.
Oh, Puma's up 10% since we spoke about it the other day.
What was the catalyst on this one?
That was a takeover.
The acquisition
potential.
offer, yeah.
Yeah. So, yeah, Puma, has there been more update on that? Deals of the day, M&A. No, can't see anything. It says Puma up there. So what was the story that has had Puma go up 10% in the last few days?
While Rich figures out and scans the document, I can
There we go.
circle back.
Two investors are preparing a takeover bid for German sportswear maker Puma, Manager Magazine reported. So Manager Magazine always come out with the stories. Now this is old. This is not from today. This is from is it Thursday night? No, 17th, 2 days ago. But that has. I wonder if we'll get that this weekend. Would you buy Puma here on with those bid stories?
No, I wouldn't, because I think they'll open up the hood, they'll open up the bonnet, and they'll say, "Yours, mate. I'm not touching that."
Okay, but what if there is a bid? What does the bid have to be? Because it's come off so much.
It's gotta be. When was that? That was last year, even.
It's got to be 35.
But that's a premium and a half, mate, from current price.
50% premium. But that tempts me into, because what's the downside is 19, right? So the downside's 15% and the upside's 50.
That's a good risk ratio, mate.
It's not bad, is it?
Not bad at all.
And two bidders are circling.
Do it.
Why didn't you tell me this on Wednesday? We could have bought them at 20 euros.
Because I thought it was rubbish on Wednesday, and it still is rubbish. You're buying the rumor here, mate.
Can we have some options, please? What do you think? Is Puma going to get bid for? Is Adidas going to buy Puma, putting the two Dassler brothers back together? Adi Dassler and Ronnie Dassler?
No.
I think it was. I'm pretty sure it started with an R. And it wasn't Reihart. Not me as saying, so you're saying there is a chance?
So it was Adolf. Adi was the other.
Adi Dassler. Yeah, I wonder which company that was. And Rudolf Dassler.
Rudolf.
That was the one. Thank you, Terence. Terence 2, our saviour. The dream team on a Friday.
Rudolf Dassler was a German cobbler, inventor, member of the N-word party, businessman and founder of the sportswear company Puma.
That, yeah, that, just to make sure everybody knows what we're talking about. We're talking about that party.
We're talking about that German
30s.
party, nothing else.
Now, talking about Porsche and Hugo Boss. So we've done that. Let's go to the currencies. The currencies are...
I really hope my girlfriend isn't watching today.
Look at it, cable continues to fall there on that public sector borrowing number. Is this going to feed through to the FTSE? Should the lower cable drive the FTSE higher, or the worries about the country and the potential consequences of the budget take the FTSE lower? What is it doing so far? It's taken it 20 points lower than it was when that number first came out. So just be careful around the FTSE there. We know what happens when concerns about the gilt market.
The FTSE it's just been disappointing lately, hasn't it? Like, it gave us a bit of hope when it rallied up 93, 35, and then it just came back to its normal levels. Do you think
Ward called that very well, actually?
Yeah, he did. Do you think we'll see a FTSE at 10k by the end of the year? Or by mid next year?
Will the FTSE be? Yes. Yeah.
By midsummer
Yep.
2026.
It's about right. I mean, we're only talking 9%. I'm more likely the FTSE to be at 10,000 than I am for the S&P to be at 7,200. So outperformance of the FTSE yet again.
I'll take that bet.
And copper 462, yeah. Oil not really doing anything. So yeah, so the main story of the morning really has to be the gilt market. So let's see how they are doing. UK long gilt 50 basis point move. Yeah, that's
the
not
bond vigilantes are out.
They're circling, aren't they? They're circling. This could exacerbate over the weekend. You know, that weekend press, Starmer's had his glory now with his buddy and his special relationship. But now, are we going to see more? Because the Times are really gunning for him. So the Sunday Times this weekend could come out with something that is really trying to stab Starmer in the back.
Well, it wouldn't be in the back, would it? Because it wouldn't be unexpected. It'd be straight the dagger in the chest.
Yeah. So what happens if we get an anti-Starmer, anti-Reeves story out in the Sunday press?
But is that something that would move the market? Because I can't remember the last time I read positive press about the two.
It's not positive, is it? the main reason it's not positive is what's the alternative?
Exactly.
It's pretty worrying. The Labour Party does not have much depth now, does it?
I mean, Angela Rayner was not a good option.
No, I mean, Wes Streeting, I've got a lot of time for Wes Streeting, but he's just a little bit too young for Prime Minister. Burnham.
I think you should throw your hat in the ring. You got the colours for it, mate.
Maybe we'll get Poppy. We'll get CJ to come in on...
Can we get a poll? Who here
Yes.
thinks Rich should give himself into politics?
I think that's a waste of a poll there.
Only time will tell.
Right, what
Which
would you
party
do?
would Rich represent?
What would you do in the... I've got my red on today. Maybe that's why I wore it. What would you do in the budget? Would you cut welfare? There you go, 50% of you. I would suggest our
hate
viewers
poor
may be
people.
slightly... our viewers might be slightly biased in that a wealth tax, 30% of you still think a wealth tax though, so not that bias.
Fellow socialists.
And then increase borrowing, 5%. Well, that's interesting.
And only time will tell, which is Phil and I'm not sure how that has anything, how that's an alternative. Rich, what was your vote on this one?
All of them.
All of them, all of the above.
Cut welfare, put a wealth tax on, and increase borrowing.
Just put some steroids in that economy and boost it up.
Yeah. Liz, I'd still stand by the fact that Liz Truss wasn't that far off the mark. She just did it in a terrible way, and Kwasi didn't help himself either.
I mean, yeah, she threw him under the bus and she was too wishy-washy, but I think Rishi Sunak, and this is coming from a socialist here, I think Rishi Sunak actually had the most sort of sane version, the blend between the two. It's just that he was a victim of his own party.
What I'm hearing you say is, bring Boris back. Bring Boris back. Right, let's have a look at the FTSE 100 option expiries. This is all important because that budget is on the 26th of November. So you've got a clear trade potential pre-budget and post-budget. So in theory, I think that the FTSE could remain weak or underperforming until the 21st. So therefore, I would sell calls, but I don't think it'll go down that much. So I'd also sell puts. I'd take that premium and I'd use that to buy upside for the December. Because I think once we get past the budget, the money comes flying in to invest in the UK and the FTSE goes through the roof.
Yeah, I mean, I'm very much in alignment with you that I believe in sort of a December uptake. I think 2026 we'll see some big momentum going, hopefully.
So if we sell the 9,000 puts for November, we get 30 ticks. If we sell the 9,400 calls, we also receive an additional 28. So that gives us 58 points by selling the 9,000 and the 9,400. We'll take that 58 points, and was that November? Oh, no, sorry. We get much more for November. I was clicked on October there. We get 70 ticks for November, selling the 9,000s. We get 77 ticks selling the 9,400. So I'll probably go slightly higher there, actually. I go up to 9,500 and take the 45. Combine those sales, we get 115 ticks. We take our 115 ticks and we go into December, and that allows us to buy a 9,300 call, which means we've overspent by 63. So we need to receive 63. Well, there's 53 from selling the 9,600. So we do the 9,300, 9,600 call spread, and that means that the whole thing costs 10 points for 300 points of upside. That would be my budget trade, and that takes us into the break.
Oh, nice one. You're like a pro, mate.
Ronnie, what's your weekend plan, sir? Because we're about to leave you.
Yes, so thank you very much for tuning in this morning. I will spend this evening with my friend, the same friend who said that if you love your grandchildren, buy ASML. It's his 30th birthday.
I think you owe him a drink.
I do owe my drink. I'm buying my dinner, for Christ's sake. So I'm taking him, me and some other friends are taking him for dinner tonight. And then the weekend, I will spend it with, guess, not my sister. Not my sister, which Terence said. It's not the voices in my head. Trip to the hairdresser. Thanks, mate. Yeah, maybe.
I won't tell you what I'm doing at the weekend then. Right, let's go to a break. It's going to be Angeline and Joe next. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
To Expert Edge with myself and Joachim Clement from No Surprise, the company which is behind his head, and the name gets larger each time. each time you come on from your very, very spectacular remote position. How are you?
I am good. I am working from home today, which is unusual for me because I'm normally fetishizing the office. No, it's mostly because when I'm working from home, I have a problem socially distancing from myself from the fridge. So the end result is that I prefer to work in the office.
This is the fridge at Panmure that's got the wine, yeah?
No, the fridge at home. The fridge at Panmure only has beer in it, and it's locked until 5 o'clock, unfortunately.
I know, I tried when I was there. Speaking of which, loads of people on the chat already chiming in because I did alert them to you joining us this morning. Morning, Steve Davis, just saying good morning to some of the people that we haven't already greeted. Boise, loving your message early on about Intel, the Intel pop. Did you see, were you here during the pop yesterday in Intel? Just showing the chart, just remind everyone the action yesterday. Let's have a look at the hourly chart so you can see that pop there.
Yeah, I mean, Intel was quite surprising to me that NVIDIA would take a stake in Intel. That's obviously very positive because it's actually positive for both companies because it provides Intel with much needed capital and it provides NVIDIA with a possibility to broaden its offering in the medium term and to kind of develop more chips for kind of like everyday consumer needs, not just the AI chips. However, I'm still not a fan of Intel. And the reason is that the company has kind of missed the boat in semi-design for, I would say, at least 10 years, if not longer.
Interesting.
And what is much worse, actually, to me, is that the government now is taking a 10% stake. Especially with the current interventionist government, you could imagine that they will basically try to intervene in Intel's investment decisions. If Intel wants to build a factory somewhere outside the US, the government would probably veto it. And that is just another way of saying that Intel's costs will probably not come down as much as they need to in order to be profitable. It's the old thing, like the moment the government gets in the way, you have a problem with being efficient and profitable.
That's right. And I'm pleased to hear that you said that because you've preempted my next question. You know, a lot of fanfare has been around Libutan and how, you know, he's a real veteran and is going to change the company around. But people tend to forget that Intel has brought Libutan on because it's kind of lost its way in the last 5 years or more.
Yeah,
and the question
absolutely.
now is whether it can play catch up fast enough.
Well, I compare it to the situation that German car makers are in. My favorites, German car makers.
Says the man who drives a Polestar and who is solely
Yeah, the
responsible
reason-
for me driving a Polestar.
Thank you very much. Best choice of your life. I expect to get
Smart.
a test drive when you come over for dinner soon. And what was I going to say? Oh, yeah. German car makers lost the plot when they kind of missed the boat with Tesla coming along and revolutionizing the EV space, and then the Chinese coming along as well. And now the Germans are trying to play catch up, and they've been trying to play catch up for the last 3-4 years, if not 5 years, and they're still only halfway there. So when I think about Intel's turnaround, that to me is a decade-long enterprise, not just something that you kind of have done and dusted in the next 1 or 2 years like Burberry, which coincidentally is also a really favorite stock of mine, even though it has kind of popped so much in the last 6 to 12 months.
Now, just very quickly before we move on to Burberry, the reason why I'm curious about your thoughts on Intel as well as your thoughts about whether or not I should increase my position is, of course, because the pop was down to NVIDIA, right? And the two groups co-developing chips for PCs and data centers. You know that Ange loves data centers and any trade linked to that and investment linked to that. And also the powering of these data centers that will need vast quantities of power in the next decade and more. I'm just showing you NVIDIA because this is due to a trade live with IG hardcore client and fan. Last night, this is a sneak preview of the man that I've got locked up in our boardroom right now, waiting to come up because I made him promise that he would come on. I was actually here earlier. I'm going to show you the picture. Guess who was in Chinatown or in that area in Shifutang last night?
Yeah,
Can you see the picture?
He was in Windsor. I can see the picture, and he was in Windsor the other day, so I guess he needed some real food instead of some British palace food.
And I've been told by, yes, this is an IG client as well, who messaged me yesterday because she watches Trade Live with IG in the evenings, and she has a lot of fingers in many pies, including, vast empire, business empire. And she was like, oh my God, right now you closed, where are you? And I was at home going, dude, I should be there. So I am going to try and see whether, I wish it was, yes, I was here, and we had Rich saying, yeah, Andrew's got a special guest. I wish he was in here, but if I meet him later today, trader friends, I will, of course, invite him onto the show. That translates into bite his ankle and not let go, and bring him here. Yes. So want to now switch over to Burberry.
Yeah.
Because Burberry, as you remember, was a sore point for me in October last year. Let's have a look at Burberry. I know you're a fan of Burberry, but this, having a look at the daily chart here, it is starting to recover now. And it's forming a bit of a base, but to me, from a technical point of view, we always talk about 2 tentative touches, 3 is confirmation. And this chart here does not give me confirmation yet. I don't see volumes rising, that we are clearly, definitely back on an upward path. It has fallen from the high seen in July, and I can take you back to October, I think it was October or September last year, when I felt pain when it slid. There we are, 31st of October. So prior to that, I sold off because I thought we're not going to see China come through with any strong data. The Chinese, of course, love their luxury goods, except for unless they're talking about luxury stocks. And I sold my Burberry shares, my Burberry position, and went to a client event after that, and everyone was laughing at me going, oh, Burberry and, because everyone then got very happy when China unveiled its bazooka, the stimulus, one day, expecting it to be several days. But of course, that did not come to pass. Tell us why you're excited with Burberry.
So I went into Burberry in May. So the nice bit there that you see in the chart, and I was asked in last month basically whether I would still buy it, and clearly we are going through a consolidation phase, and indeed if you do a support line through the uptrend since April-May towards the August low, you will see that we've kind of broken below that support line for the time being. However, from a fundamental perspective, I would say, do you need my help?
I'm just drawing it so that
you are the master chart technician, not me. I'm the fundamentalist.
I'm changing it to the rectangle because we often talk about areas of interest and not straight lines, as you know.
Oh my God. Okay. In any case, why I like Burberry is not because it's a great stock, but it's a stock that people still don't like, and where the recovery is driven by the turnaround in the company itself. And the thing about the turnaround is that every time there's a quarterly results announcement, they are surprised quite significantly to the upside, and they get another boost. And so the next quarterlies are around in late October, I think, is the next quarterly. And that's when I expect it to get another boost into year end. What also makes me confident about a year-end rally in Burberry is that analyst earnings revisions are still to the upside, while for most other luxury companies, it remains kind of meh, because of exactly the point that you have, namely China. There is a lack of demand from China. On the other hand, the demand from the US is getting better, and in Europe, it's also getting better. So the question is, does that mean that it outweighs or offsets the Chinese demand weakness? I would say the more of your revenues you make in Europe and in the US, the better for a luxury company these days.
I agree with you. However, I have got one eye on the fact that in terms of the US, I've been reading and crunching a lot of data that points to the fact that the number of people who are in the super wealthy category in the US is actually increasing.
Yes.
Which is why we're seeing this, pulling this back to stock markets, which is why we're seeing this, almost like lift up despite all this uncertainty. And many of these super wealthy are going to buy a lot of quiet luxury, right? And so that's why I'm still sticking with the Hermes, because the higher, bigger brands, those that
Brunello,
yes, offer products that are way more expensive, but rely on people who don't actually need an income in the first place. Speaking of which, markets. We talked a lot about, you were here with me in the studio about potential correction in the summer. It hasn't come.
Why do you go on about my mistakes of the past? We talked about that 2 weeks ago, and I said I was wrong. What more do you want?
You could still be right. You could still be right. September is not over. It's only the 19th.
So to give you an idea, because on Monday I published my first look into the tea leaves for 2026. And much to the surprise of some of my clients, I said I cannot be bearish US stocks going into 2026. While I expected a correction in the summer, based on the tariff shock or similar things, what happened obviously was that correction never materialized because the focus shifted to the Fed and Fed cuts. And now we've had the first Fed cut. We're going to get probably 2 more this year. And then the dot plot of the Fed says, well, just 1 rate cut in 2026. Quite the opposite. I think that the Fed will increasingly lose its independence, will increasingly be governed by political needs, and that will force it to cut much more aggressively in 2026 to go quite a bit below 3% by the end of 2026. Now, money markets and bond markets are pricing in 3% at the end of 2026. And the real decider will be in December, January, February, because in February, the regional Fed heads will have to be reconfirmed. And if by that time the Fed governors decide that they want to veto some of the hawkish members, then it's clear. Until then, there will be a lot of speculation, but I think the Fed will cut aggressively throughout the rest of this year in 2026. And that just gives a sugar rush to the US stock market. Having said that, because you're such an NVIDIA fan, I would say that sometime in 2026, the AI boom could run out of steam. Not yet, not now. Don't go anywhere near a short position on NVIDIA or the other hyperscalers. But in 2026, simply because the more the Fed loses its independence, the more the long end of the Treasury yield curve will drift higher as people price in more inflation risks. And what that means is that the costs to finance major data center investments will go higher and higher. That's not going to burst anything major, but it will make the marginal next data center project unprofitable, and so they will scrap it.
Now you got my blood running. You've mentioned hyperscalers and also given us a duration. Thank you for that. Everyone chiming in right now, getting excited about what you're saying. Some questions from the floor. Andrew McKilvey. Thank you, Terence, for pointing out, saying, has Joachim got an overall view of what drives the FTSE 100? Or is it going to be China growth, weaker GBP, bank rate, UK economy? So many factors confusing me. I'm glad you're asking this, Andrew, because I just unwound my Vanguard FTSE.
So I am going into year end still bullish FTSE 100, and I am also bullish stocks Europe and Euro stocks. But in the FTSE 100 case, my case is that I think at least until the budget on the 26th of November, we're going to see long-term gilt yields drift higher, the yield curve steepening, and that is really good for banks. In the meantime, we're already seeing services sentiment, the PMI, services PMI for the UK have gone through the roof in the last month. And what that means is that the entire services sector in the UK, which, let's face it, is 60-70% of the UK economy, will do better in the next 6 months. So any kind of services company should be really supported. And yeah, I wouldn't be bullish on the commodity parts. I know you've had Tom Price around. He's absolutely right. He's the best commodity strategist I've ever known. I made the mistake of disagreeing with him once. Again, let's not talk about my past mistakes. We all pay school fees. But I would say any services company, whether it's insurance, banks, the relics, LSEC kind of place, all these guys will rally into the next 6 months, and that should support the FTSE 100. Indeed, just this morning, Bloomberg's monthly survey of strategists came out, and we have consistently been, since January, the second highest target price for 2025 amongst the survey. We still are the second highest. Only the people at Deutsche Bank are a little bit more optimistic than I am, but that's just because location-wise, we're literally next door to each other.
What do you say to people that have been messaging in saying, Ange, I'm heavily in Lloyd's and heavily into some of the defensive you've talked about in the UK, and they're really worried about the budget coming up?
Yeah, I think the budget is one where the key message will be that the UK will hike taxes. We can speculate, and we will speculate a lot in the next 2 months. Which taxes? Not much. But in the end, what is going to happen, in my view, is we're going to see tax hikes. People are not going to like it. The markets will kind of negatively react to that because they think that curtails growth. But higher taxes tend to reduce GDP growth. But you have to also be aware, what are these tax revenues used for? And we just yesterday had that wonderful announcement about all those billions invested in the UK in AI. And the crucial difference between the announcements in the US, when Mark Zuckerberg sits there across the president and says, oh, we're going to invest $600 billion in the US in AI, that was a made up number. I mean, it afterwards leaked that Mark Zuckerberg told Donald Trump, like, I was surprised by your question. I wasn't ready for it, so I just threw out a number. None of that is real investment. That's all planned investment. What was announced yesterday in the UK with 22 billion from Microsoft, 5 billion over the next 3 years from Google, these are all projects that already exist. That's money that's really coming through. On top of that, the government in the UK spent 65 billion pounds, so about 80 billion, 90 billion US, in 2 years on transport infrastructure, digital infrastructure, energy projects like small modular reactors and stuff like that. So there's a proper investment boom, and that has a fiscal multiplier of above 1, meaning that for every pound spent, GDP grows by more than £1 and offsets the tax hikes. So I am bullish UK economy. I am bullish the FTSE 100 and FTSE 250.
Nice. Just looking at the Oklo one that I was looking at yesterday, as you mentioned, modular. Derek also chiming in and asking, what does Joachim think of Nestle?
Ooh, Nestle is a tricky one because of all the governance issues with the new CEO and the chair stepping down early. Yeah, that's the unfortunate thing. So we had Nestle on a buy and wrote it all the way down, as you can see. And again, you have a real talent today of making me look absolutely stupid. Thank you very much for that. Can we talk about the good calls that we made, like Burberry, like Relics and stuff like that? But anyway.
Relics is good.
So
I am a long-term holder of Relics in my Ange pension.
Good, good. Your pension should be doing fine if you're a long-term holder of NVIDIA and Relics. What was I going to say? Oh yeah, Nestle. At the moment, I think it's more of a wait and see. I do think that the stocks are really attractively valued. It is the one food company worldwide that is probably best positioned to deal with the Mounjaro or Ozempic trend of people eating less sugary foods, etc., because they have pivoted 2-3 years ago towards pet food and healthier foods more than, say, a Unilever or Danone. So amongst a group of struggling stocks, it is the best stock, but it will continue to struggle.
And on that note, we have got Rich waiting in the wings to join you, Joachim. Everyone on the chat, Boise, also Monkey Man, I see your comments on National Wealth Fund and also lots of other questions from the floor as well for you, Joachim. So stay with us. We'll be right back.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Hey Joe, how are you? Good to have you back.
Good to be back after such a long break. About 2 minutes or so.
Now talk to me. Let's go over. If I could have told you the comments that Powell would have said on Wednesday night, that we are data dependent, that we're going meeting by meeting, would you have thought the market would be higher or pretty much unchanged as it is? What do you think?
I think the market did it right, and I would have said the market won't change much because the 25 base rate cut was very much expected. I didn't expect anything else from Powell than to say we're going to be data dependent and we're going to wait. The really interesting thing was the dot plot.
Yeah.
How did the Fed voting members, the FOMC members, think about inflation and economic growth? And what role would Stephen Miller play? And I mean,
the cat amongst
story,
the pigeons, I think, is the phrase.
Yes. And I think that the two storylines that have been chewed over by now, so I'm probably not telling you something new, is that number one, I think that the median dot plot is still way too high above what is really going to happen. So as I just said with Ange, one rate cut in 2026 is a joke. The Fed is increasingly, in my view, going to lose its independence, and that means they will be bullied into cutting more in interest rates more. There has just been a nice study out about where historically somebody looked at what happens when the Fed gets bullied by the White House. The end result is if you try to kind of quantify it, it's about 4 to 6 rate cuts on top of what they normally would do.
But forget about the White House. What do you think is justified? Because he didn't even say that the targets are balanced, right? He said that they're coming more into balance.
Into balance.
So he's still more worried about inflation than he is. The jobs market, albeit the jobs market he, stated it is getting into a bit tricky, even though it's at a historically low rate. Where is the justification for these rate cuts?
So if I were a central bank governor and on the Fed OMC, I would not have voted for a cut. Let's be clear about that. I think the Fed, if it was like completely independent, it would have stayed where it was and said, like, we're going to wait and see whether that inflation drive that we're seeing is going to turn sticky or not. Now, you could argue, and I think that's totally reasonable, that a 25 basis point rate cut is justified given the weak jobs numbers that we've had for now several months in a row. And we know that rate cuts take about 9 months to 12 months to filter through. So you want to give a little bit of support to the jobs market. I think what we saw on Wednesday with Jerome Powell's comments is that between the lines, he admitted that the Fed is now fully focusing on jobs rather than inflation and is willing to take the risk that inflation gets sticky. And if you ask me, in 2026, it will obviously move higher, but probably not get too sticky. But I'm really worried about 27 and 28.
Well, hang on though, but where's the neutral rate?
Oh, the neutral rate is somewhere around 2 in real terms and about 2% inflation on top of that. So somewhere around 4.
Oh, you think
Does
the neutral
that number
rate's
sound
4?
familiar? In nominal terms, yeah, I think that the neutral Fed fund rate should be somewhere around 4.
Right.
3.5 to 4.
And well, 3.5 different though. 3.5% means that we're not going to get there until March next year. And if you're telling me there's a 9-month delay, then that means we are still hitting the brakes on the economy. We're still suggesting that there will be an increased number of job losses until the end of 2026. We're heading for negative non-farms, aren't we?
Oh, we are absolutely heading for negative non-farms. No doubt about that. And the reason why we're heading for higher unemployment and more job losses is mostly because, not so much about monetary policy, by the way, it's really about economic uncertainty. The very fact that Donald Trump keeps changing his mind and that we have now the tariffs in place, those two things have reduced investment activity and have turned positive growth in Q1 into negative growth in investments in Q2. And guess what? Negative growth in investments is always followed by more unemployment.
Okay, but I must have heard wrong then. I thought you said this market's going higher in early 2026. Yes. Well, hey, you cannot have higher unemployment, lower consumer spending, less investment, and a market going higher, surely.
Oh, yes, you can. It's called a sugar rush economy. It is all about basically what we've seen in August. The moment Jerome Powell stood up in Jackson Hole and basically announced that there's going to be a rate cut in September, the market started to rally. Mm-hmm. And that's what's going to carry the market forward in 2026. Lower interest rates on the short end as the Fed continues to cut. And let's be clear, that supports consumer spending. Because most importantly, credit card interest rates and auto loan interest rates are coming down because they are linked to short-term rates. AI buildup, that's long-term interest rates because it takes a while for an AI data center to be built.
So my first instinct was to get into the regional banks. The home builders is a tricky one. Regional banks seems like that's a good trade. The home builders is a bit tricky. I feel like I could take a bit of pain on that first before it comes right.
I think you're going to get a lot of pain on that because home builders have not just that new home sales are weak and new permits are softening. Mortgage interest rates are not going to come down. One of the things that Donald Trump will find, no, because if the Fed is cutting more and more aggressively, the long end of the Treasury yield curve will continue to drift higher for two reasons. First, people are going to price in more inflation, and more importantly, they're going to price in a higher risk premium because they don't know whether the Fed is really going to be independent and really going to kind of keep its dual mandate in place or replace it with a pure jobs mandate. And that keeps the 30 years and 10 years drifting higher and makes the yield curve even steeper.
So even more pronounced steepening of the yield curve, the banks are nailed on.
Absolutely.
These
That's
banks
why I
are
like
much higher.
Any kind of regional bank, even the really traditional banks like Zion, etc. Insurance companies should be doing okay in the US as well. So that's the kind of trades that I like. But the big question that comes out of this, if the long end of the yield curve drifts higher while the Fed is cutting interest rates, is the Fed going to be forced to intervene in the long end? Are we going towards yield curve control in 2026? To me, that's a real risk, particularly under a new Fed chair, when I think the new Fed chair will shift the odds towards the Fed becoming a little bit more towards the White House's liking. And that's when we could see either QE come back or entire yield curve control. And that's what would snap back the entire yield curve at the long end and push it down very rapidly.
And what is the winner from that? It's got to be, well, gold's obvious. Gold's a huge
winner.
Gold
is the obvious one. And ironically, as I just said, I think about the AI trade losing steam in 2026. It's only going to lose steam as long as the yield curve kind of becomes steeper and the long end stays high. If we get QE or yield curve control, that's a massive rally for every growth stock in the US, in particular NVIDIA. So I am going out on a limb here.
But the dollar collapses.
Yes, the dollar collapses. And I'm going out on a limb and say, look, I would take my chips off in 2026 on NVIDIA and the hyperscalers. But the risk is that I get really whipsawed into a massive rally.
It's going to be an interesting 6 to 9 months, I imagine.
Oh, you have no idea what my views are for 27 and 28. 26 is kind of the last relaxing year in my 3-year forecast.
Well, yeah, because a yield, let's not, make any bones about it. Yield curve control is a desperate situation that proves that America is, the dominance and the exceptionalism is collapsing.
Oh, absolutely. And what I already found so interesting when, I think 2 months ago, Scott Bessent gave an interview and said, we are going to reduce the duration of the new treasuries that we issue because we think the long end is too high in terms of yield and it's too costly. I was like, can you tell bond investors around the world more clearly that you think you can't pay back your long-term treasuries?
Yes. Oh,
I mean, why don't you just hang out a sign and says like, we are bankrupt. Thank you very much.
Yeah. Oh, right. Okay. So top picks at the moment, regional banks. On the short side of the big boy banks of JP Morgan, Goldman's got much left to go, or are they getting towards the highs?
I think they've got some room left to go, but mostly from the trading revenue and the trading desks. I think trading revenues will remain really high. That's also why I am bullish on stocks like IG Group. I know you can't say anything about that, but I can.
Good. Keep it coming.
Yeah. I know. I can mention some competitors of yours if you like.
There are none.
I know. You're unique. You're the number one. Like the moat is gigantic.
But also, I would imagine that UK-focused brokers also are doing well, because Bank of America decided to call the UK market an emerging market the other day. But I think there's potential for a lot of investment after we get past this budget, isn't there?
There is, as I said, we just yesterday had a lot of investment announcements, and these are real money flows that are coming in for projects that already exist, or where basically it's just follow-on investments. Yeah. So that's one thing, and the government has its spending review published in June, and that's 65 billion in 2 years on transport and digital infrastructure and stuff like that. So there is real infrastructure investment, and that also should lead to other corporate investments in the UK in 2026. So there's more to come, and that I think is really good news for construction companies in the UK. It is good news for banks in the UK. It is good news for financial services companies.
We've got a question coming in from Not Me. What if the Fed starts buying mortgage-backed securities? That could lower the long
Absolutely.
end.
This is exactly going, because we jumped off with the house builders in the US, and I think they are at the moment not a buy. But if we're getting into that QE yield curve control scenario, I would expect the Fed to not just buy treasuries, but MBS and ABSs in order to get the yield curve down and transmit it into the mortgage market very directly, which is another way of saying that's the buy for Baltic Group and all those home builders.
The Bank of England's going to be finishing its QT just as the Fed starts its QE.
Yeah, so what's the problem? No, we are. I mean, that's an interesting thing, actually, what you say, namely that we are getting into a world where monetary policy diverges. The ECB has absolutely no reason to cut interest rates. The Bank of England will probably cut interest rates in order to kind of provide a little bit more support for the consumer, but very gradually, while the Fed is probably going to cut interest rates much more aggressively. So we're going to get into a world where sooner or later, short-term interest rates in the US will drop below the ones in the UK and in Europe, in the Eurozone. And that's bullish euro and bullish sterling versus
Yeah,
dollar.
that's got 150 sterling written all over it, doesn't it?
Ooh, that's a dramatic call. That is like over what time frame? By
Yeah.
the end of 2026, I would say possible. In the next 6 months, that's really dramatic.
Right, Mr. Clement, I'm going to have to run because we've got all sessions coming in. Angeline's going to be running in 20 seconds to do the US Open. Thank you very much. Have a wonderful weekend. As always, your words are wisdom, and we look forward to having you back on.
Cheers.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
And we have Bill Blaine from Winship Capital with us. Hey, Bill, always great to see you. We've got all sessions open. Do chime in if any of them pop out at you. But we are now 2 minutes out of the gate. Let's have a seat to see how it's shaking out here, especially in a week when the Fed has, as expected, let's have a look there, closer to that, having a few tech issues. Right, QuantumScape up 3% there. Beyond Meat also up 2.5%. Neo up 2% there. We've also got Moderna, which has not uncrossed it. That's really interesting because Moderna is now part of a 24-hour offering. So we'll see what's happening over there. Tesla also revving higher as we speak. So as I mentioned earlier, in a week when the Fed hasn't caused waves, also quadruple witching today, not seeing any waves form yet because of that. Taking a look at the losers list, we've got Ocugen, extended hours offered there, down 4%. Plug Power, friends, I know many of you have a position in Plug. Just be aware it's down 2% right now on all sessions. And Monkey Man, Hems and Hers moving lower. Have you reduced your position, Monkey Man? My holdings are also down a bit there. Just taking a look elsewhere to make sure we haven't missed anything. Ford Motor is recalling some US vehicles as its door trim that detaches whilst driving can create a road hazard, increasing the risk of a crash. That's according to the NHTSA. Let's cross live now back to Bill, who also loves all manner of things with an engine. But we'll go to a quick sting and we're back with Bill. Well, so good to see you. It's been such a wild ride since we last spoke. Talk of this crash or summer Spooktober even not happened yet. What's happened?
Well, it has been, as you say, an absolutely fascinating week. We had I suppose the most important factor for markets has been that Fed ease. And of course, stock markets have gone completely hat stand on it. I think we had successive records in every single index in the States, which is very unusual that they all perform so strongly. And that, of course, is fueled by the expectation that lower rates will enable US corporates to go and borrow more money to invest, and that consumers will then be able to go and borrow more money to consume. But of course, what you actually see in reality is the stock markets, as we all know, are the equivalent of taking a dartboard, pinning a copy of the FT to it, and throwing a dart, and then you buy the stock that the dart lies on. To find the truth in markets, you need to look at bonds. And what's been very interesting is, although the Fed's funds rate was cut to 4 to 4.25% this week, a 25% ease, the bond market has actually sold off. Now, it's only been a slight, what we call bear steepening of the yield curve, but the 2-year bond is up 5 basis points, the 10-year bond is up 12 basis points, and the 30-year bond is up about 15 basis points on the week. And that's because of two things. A, the bond market is scared about inflation, and B, it's a clear sign that the Federal Reserve caved in to Donald Trump and gave him the kind of thing. Now, what was really interesting, there was a new chap who is Trump's placeman in the Fed who joined on Monday.
Oh no, did you hear the first question that was lobbed during the press conference?
No, I missed that.
It was quite fascinating. It's in the FT if any of you want to catch up on it, but it was effectively something along the lines of, what's everyone's reaction to Trump's lackey in the Fed. And Jerome Powell was very, very, I have to say, very diplomatic about it. He kept to the party line.
Yes, of course he did, because he is an honourable man. Whereas I'm trying to remember the new chap's name, Stephen, what is it? Stephen Mirren, that's it. He's also chairman of Trump's Council of Economic Advisors. Now, what we know is that one person on this famous dot plot, which is where the Fed members think that rates are going to go, everyone else thinks that US interest rates might go down as low as 3.6% by the end of this year. Somebody, and we think it's Mirren, the Trump place guy, he thinks it's going to be 2.5 to 2.75. That's what he's going to be pushing for. Now, the thing is, inflation is the critical aspect. And if you end up with rates that low, that will be below the 3% inflation we've currently got in the US. So the bond market is sending quite a strong message that A, they still are very concerned about inflation, and B, they're very concerned about this lack of independence. And the thing is, with the 10-year bond still hovering higher this week than it was before the Fed cut, that means that banks can't go and cut interest rates on mortgages or loans, which I reckon means that Scott Bessent, the US Treasury Secretary, is going to be challenged by Trump to get rates lower, which means a repeat, as we discussed last week, of QE, where you end up artificially bringing down bonds by the Fed buying lots of bonds, or you do something like pricing the whole of the Fed's or the Fed's holding in gold, which are, of course, held in Fort Knox. And I learned a fascinating thing this week that gold, which is about 8,000 ounces of gold, which is quite a lot, it's marked to market at $42. Now, the current price of gold is what? 3.7 thousand. 3,700
and rising.
So that would be a massive remark, which would enable the impression that the US isn't going to hit a government shutdown. That's when they run out of capacity to raise further debt. So there's games within games being played. I think the message is to everyone who is rejoicing in this stock market rally just now is just be aware that the bond market is very concerned. And in the bond market, Angie, as I keep saying, there is truth.
There is truth indeed, which brings me to
Aside
my
from
next
that-
question. When will the truth be acted on? When are we going to see a real reaction from the markets? Because we've been here before, haven't we, Bill? Many times.
Yeah,
And the
you keep
markets
asking me
just
this
keep
question, and
going higher. They just
Yeah, and you
keep, it's
keep-
almost like they're
you-
ignoring. You've got this
I
party
know.
that is happening on Bill Blaine's rooftop, and it's been built by
Bill-
Tom work from home,
Okay,
and it's not, it's
I
getting
am going
rickety,
to
but
the-
more and more people coming on. And just when you think, you know, that rooftop is looking not so, you know, stable, more people come on and the music keeps going. So when are we going to see that rooftop start to come down?
All right. I know what you're going to say to me. You're going to call me a perma bear. You're going to tell me that I predicted 25 of the last recessions, of which none have happened, and 25 market downturns. The fact is, I am Cassandra. I am predicting something that is definitely going to happen, but no one is going to believe me. I think there are so many things going on in markets. And of course, as we discussed last week, I'm not predicting a complete meltdown. I think we're going to have a correction because there's a whole bunch of things coming in. And I think one aspect of that correction is that this battle that we're seeing waged in the Fed between inflation and jobs is going to see higher inflation. And also we've got an awful lot of US economists think there may be something of a recession. And that's going to dent market confidence. If we see inflation and a recession, market confidence, going to see something of a correction. We've also got this enormous bubble in AI, where you have, I mean, one of the numbers I love is that nearly half of all investments in venture capital and private equity in the last 6 months have been straight into anything that has AI anywhere in the name. Now, I'm old enough to remember the dot-com boom, and we managed to persuade investors that a pet food company called Pets.com was worth something like 20 billion when it was unable even to deliver cans of kennel meat to its customers' front doors. So you need to be suspicious that there is something of a bubble in AI. And that will become apparent when many of the investments just aren't making the kind of savings that they're doing. And also the massive hyperscale spending on current technology to build warehouses gets replaced by someone saying, actually, this new chip can do it all much cheaper and with less energy and faster. So that the world will keep changing. So that's why I think we're going to see something of a correction. And October is always a great time for a correction. It's turning autumnal and everything's beginning to get a little bit depressing before Christmas cheers us up. So I'm going to stick to my prediction of something of a correction come October. Now,
I agree with you. I think maybe it might come a bit later this year because, you know, don't forget we had that April correction there. Just showing the iShares Future AI and Tech ETF. Just going to get some questions in there, Bill, because we've got Pelican. Good morning, Mo, asking, Bill, can you give us your thoughts on multiple cuts in 2026? I assume he's talking about US rate cuts and the impact of that on stocks, because I guess what Mo is probably trying to get at is, isn't that just going to give all these tech stocks still another additional lift higher?
Well, you would think so, but the reality is that markets are not stupid, and they're very aware that if you cut interest rates, that has really serious consequences, not just on the currency, which is important, but if you cut rates too aggressively, then you're going to create all kinds of distortions in the market. Now, as we mentioned earlier, inflation is currently around 3%. The Fed funds rate is 4%. In the next couple of weeks, I'm pretty sure that Trump is going to get his way. Governor Cook is going to be removed from the Fed, and he will put a second supporter in. That will effectively then give him a potential majority in the next decisions, and you will start to see more aggressive cuts occurring. Certainly by the time that Powell resigns or his term finishes in May next year. And by that time, a very politicized Fed will do whatever Trump wants them to do, which means cutting more aggressively. Now, I think the sensible approach just now for the Fed would be to sit and wait and see what is going on. Yeah, that's kind of difficult to have the patience not to act too quickly. But the market is very much anticipating 2 more Fed cuts of 25 basis points each by year end. If that doesn't happen, that's another thing that's going to cause a bit of a sell-off. But I really can't see the reason to do so until we know really what's happening in employment. Now, the thing about employment is the numbers look weak, but that may actually be because of how successful Trump's deportations have been. And you're actually removing workers from the economy, which means you don't need to create as many jobs for the market, for the employment market to be neutral. And you may even be creating a situation where removing all these people from the job market generates wage inflation, because suddenly you cannot get the guy to clean your car or do your lawn or
clean the
in
house.
a factory.
Yeah.
And some of the biggest employers in the States are reporting quite serious labor shortages. So that's inflationary.
Now,
But at the
Bill,
same
we've got
time,
loads
we
more
have this
questions.
recession.
If I don't interrupt
Okay,
you,
I'll
we're
try
not
and
going
answer
to
them faster.
be able to get through all of them because, they're
Let's
all
try.
very clever questions. And actually, I am very, very interested on your thoughts on this as well. Caught Short asking, what does Bill think of Palantir and UK military investment? I'd love your thoughts because I was, of course, messaging you and speaking to you en route and coming back from the DSCI last week.
Okay, you know that I'm a defence bull, and the reason I'm a defence bull is because I know my history. And any country that is well prepared for war tends not to have to fight them. So I'm a great believer that we need to be spending more on defence, and I think it would be perfectly possible for a smart government to go to the nation and say we're going to raise taxes, but also fund this from the bond market with new spending. And that has to happen across the whole Europe. This year, we have seen a superb rally in defence stocks as it became clear that Europe has to defend itself. At the same time, we're also seeing remarkable innovation going on in introducing new technologies, because what we have learned from Ukraine about future warfare, you were talking last week about this new BA system that is effectively a laser that will shoot down drones targeting tanks and other armored fighting vehicles. But there's all kinds of tech going on. So yes, defense is going to be a critical area. It's one of the stock sectors I'm personally invested in just now. And I am spending an awful lot of my time in my main business, because remember, coming on air and talking about markets and writing my daily morning porridge commentary, that's just my side gig. My main thing is funding stuff to invest in the private capital markets, and defense is one of these areas just now.
Caught Short, Bill, fantastic views there. Also, Caught Short, one thing to remember is that a lot of the mood music, and Mo, you wanted me to send you some pictures too, a lot of the mood music that was captured in the DSCI last week, as I was speaking to all these top-notch executives there and looking at their shows and their displays, they had an incredible land section this year, is that much of the funding that was announced has already been allocated. And that is why you saw this plateauing, as you can see here. It has had a bit of a leg up there, but that's why you've seen this plateau there. I personally, this is not trading advice. I have started to look to dollar averaging elsewhere, because you see this, I'm going to show you Rheinmetall, one of the big beneficiaries earlier this year, but as you can see as well, it has also plateaued, right? That's Rheinmetall. Same thing for Thales. Let's have a look at Thales as well. This is the daily chart here, and the reason for this, Caught Short and Mo, is because a lot of people think, this is from the DSI, not myself, that new money, not money that's been allocated and essentially already spent. New money is only going to come into the system for Europe from 2027. Right, the next question.
I think the world's changing, though. I mean, we are going to see a massive change in the next couple of weeks. It becomes clear that I think Trump has lost interest in Ukraine. And that's another incentive to do more.
That
and some of the ideas that let's keep an eye on this sector.
Yeah,
Next
let's keep
question.
an eye. I mean, obviously, all things will change if we have, you know, an attack. But what they're talking about is all things remaining equal right now. Where we have the spending that was announced last year and after Trump 2.0, right? And then beginning of this year, Germany announcing it's going to loosen its coffers. That allocation has been done. And don't forget, Mo and Steve and everyone else caught short. There is a huge amount of money that's also going into the admin. As we all know, you might announce all these big figures, but it always depends on how much of that goes to the boots on the ground. Shilling, I see your question. Email me on ask@ig.com and I will answer you personally after this. We've also got a very good question from Paul Williamson. Bill, where is the money coming from? Global market caps, equities, bonds, gold, crypto? There must be a limit. Where is the money flow coming from?
That's a great question. I mean, leverage is an enormous way of creating money. And that's one thing that tends to drive markets, especially when everyone is getting exceptionally bullish. And of course, it is leverage that catches people out when suddenly markets start to worry and become increasingly illiquid and you can't pay back that leverage that you've created. But there's clearly a lot of places where cash has gone and is now parked. And gold's one to mention there. You know, gold is a significant asset in terms of the total amount of cash that's parked in it. And if we were to suddenly see a much calmer world where there were no longer concerns about the global hegemon struggle between China and the USA, and suddenly Europe was able to get growth and lots of other six impossible things before breakfast occurred, and people started to sell out of gold as the safe haven, then that money needs to go and find somewhere else to go, and that would create some kind of boom. At the same time, you would have other sectors that may arise where people start to see that they're either going to overperform or underperform. And again, I think you might see these big transfers occur from AI into other technologies, which could be energy or could be areas like quantum computing eventually. That will be the next big boom .com bubble that we see develop. So yeah, you have a constant succession of cash trading the next thing. The trick, of course, is to recognize one of two things. A, that it's very difficult to predict the future, and that B, you then invest for the long term. And you suddenly grow up and discover that you're living in a house in the middle of Omaha and your name is Warren Buffett and you're exceedingly wealthy because you've been smart enough to invest for the long term. And that then, of course, begs other questions. Like, I can't remember the exact numbers, but I think Apple is still Buffett's biggest position. And that's a stock that, you know, we have a lot of questions about. Where are they going to manufacture stuff? How much longer do we keep to buy the tired old iPhone if somebody else introduces something truly exciting in the AI phone space? Not that I reckon Sam Altman will ever get round to delivering anything. He's on a league with Elon Musk in long in promises and short in deliverability. But I wonder, what is the next question?
That is true. And also, I'm glad you brought up spot gold because I think it would be higher if not some of this, and this is not based on data, this is from anecdotal evidence, it would be higher if not for the, digital gold. Those of you that watch crypto and hear me talking about Ethereum and also Bitcoin, We've got a question from John as well, and Andrew McKelvey. Ange, money will come from central banks printing more, surely. Yes, and it wouldn't be the first time we've seen that. Bill?
Okay.
What do you
so
think
that's
very
gonna be
quickly, because we then need to get to John.
Yeah, no, the big thing I mentioned earlier is this bond market. The bond market, despite interest rate cuts, the bond market remains stubbornly high. That means we're likely to see QE, quantitative easing, again in the States. And that's where the Fed buys lots of long bonds to bring yields down, putting all that cash into the market. And the idea is that cash should be invested to grow the economy. But of course, what happened is that cash all flowed into what we call financial assets, stocks and credit bonds, and simply pushed up the value. And the greatest example of that is during QE from 2010 to 2023, the size of the US economy effectively doubled. But the price of the stock market, the value of the stock market went up 4 times, which simply doesn't make sense, that the stock market became twice as valuable as the growth in the economy. That was a direct effect of too much money being created by governments that simply fed markets. Perversely, this is one of my big political theories, is the effect there was actually to drive MAGA, Make America Great Again, because Trump won the support of the vast majority of the American working classes who felt they had been left behind, because what they saw was enormous wealth being created for the rich through their stock portfolios. And of course, their wages were flatlining and they wanted to catch up. And that is what the genius, the true genius of Donald Trump has been. He spotted that and he turned that into populism and got himself elected, largely on the back of quantitative easing. And one of my big concerns just now is that the US may indulge in this again, and we'll see the same kind of generated wealth inequality, which creates all kinds of other issues.
What is the saying? History repeats itself, and only those that remember.
Something along these lines. History
you
doesn't
and I,
actually
thinking
repeat
memories.
itself
Very
at
quick.
all, but
John
it does
12,
keep
27.
playing the same melodies.
Yeah, John 12:27 saying quantum is the end of Bitcoin. Do people realize this, Bill?
Yeah, people keep telling me that when quantum computing is introduced, you'll be able to crack all the codes and you'll be able to steal everyone else's Bitcoin. I mean, look, Bitcoin is a trading thing.
Here we are. I've got a watch list for you.
I have
John
some
12:27.
fun trading it. So I'll go and buy, if there's some kind of buzz in Bitcoin, yeah, go and play it. But it's not an investment. You know, when so much of it is held by companies like Strategy and all these other Bitcoin treasury companies, and they're worth more than the underlying Bitcoin, I say, hey, explain that to me. Tell me why that makes sense. And nobody ever has. And then I say to them, go on, tell me one thing that Bitcoin can do that gold or real money doesn't already do. And nobody's given me any real use except, oh, you can trade faster. Well, actually, you use stable coins now if you want to trade faster. And stable coins got nothing to do with crypto, except they are a route into crypto if you want to do that. You use stable coins to trade quickly. And I find it hilarious that Bitcoin, founded by the libertarian bros, led by Satoshi Nakamoto, whoever he was or is, or collective of people, you know, a bunch of libertarian philosophies trying to get rid of fiat currency because, hey, guess what? Central banks do manipulate currencies to make economies work. And let's replace it with Bitcoin, which have absolutely no controls, nobody backing it, and everyone believes it works. Untested. I will just sit and watch from the outside. But feel free to invest in Bitcoin and do tell me how it goes. And when you get phenomenally rich, do gloat over me. And when you're not phenomenally rich, I won't say a thing.
Says the person with a huge boat. Speaking of which, we always give you something very useful each time you ask a question. Do hit the like and subscribe button because it enables me to bring good people like Bill, with who's had decades and decades of experience in the market.
You're making me feel old.
The signpost for crypto is October this year, because that's when crypto regulation, especially in the US, there's expected to be a flurry of new crypto ETFs. This is after the SEC approved standards allowing them. And here in the UK, look out for any mood music surrounding how crypto is going to be involved in the UK's future framework in terms of provisions for stablecoin and crypto asset custody. So,
actually, explain to me why more Bitcoin ETFs makes Bitcoin more valuable.
I can tell you why it might become more valuable, but it's not to do with that. So this is not trading advice or investment advice. This is just my own humble opinion and speaking to many people in this space, including the fourth biggest holder of Bitcoin, whose name shall not be revealed because I always protect my sources. And as you know, due to my last life, I've had several. I always protect my sources. I always make sure that there are two before I actually say anything. The result of central banks cutting interest rates will mean that this liquidity will need to find a home. And each time the Fed does this means the likelihood of that money flowing into Bitcoin and crypto becomes enlarged. So in this space, pay attention to the cycles. Pay attention to the cycles. The central bank rate cutting cycle matters in this space. We have other questions as well. Jugga, who hails from Germany, saying check out D-Wave Quantum. They are developing quantum protection for BTC, is his view. I like the blockchains space, Bill. So anything I have a position in has a function, because like you, I like understanding what something does. I know you don't like crypto at all, but do you have any investment or trading position related to this sector at all?
One of the things to keep looking at is the chap who just mentioned things like quantum protection for Bitcoin wallets. I mean, that's something that is going. That sounds very, very plausible because we know there will be quantum computing at some stage. It may be further away or it may be closer than we think. But if you can persuade people of the need for something by saying, hey, quantum computing is coming, we need to protect your wallet, then you have a product, whether it's needed or not. And I suspect when you hear the buzz around things like that, that's what it is buzz. It's creating a need and then selling that need. And of course, that has been the game of markets since day one. You create a product, any kind of snake oil, you tell people they got to have it, and you, by and large, you'll always find people that will buy it. And that's one of the key drivers of markets. And stock markets tend to be optimists, so they will believe that kind of narrative. In my own portfolios at the moment, certainly plenty of tech still in it, but it all tends to be tech that's based on real possibilities, I'm afraid. And I'm still, I do like some of the things that are going on in tokenization because they could end up improving the way that we can trade. But when I see some of the stuff that's been talked about for tokens, it just doesn't make much sense. When I hear people talking about investments in stable coins, I'm saying, look, you are aware that if you buy a stable coin, somebody else is using your money to hold a treasury, and you're effectively paying them the whole dividend on that treasury for them to give you something that is like a dollar but isn't actually a dollar. I mean, people have to ask themselves basic questions about what they're buying. Sorry if I sound grumpy and
no, you do not whatsoever.
But
also,
I am a bond trader.
You've led to a really good point. People also have to understand whether you're trading this or if you're investing this, right?
Investing it. And Bitcoin to me is a trading thing because you're trading the sentiment of people like you who are convinced because they've listened to the right people who have told them it's going up. And so I listen to you and say, right, and you might be right. And it will go up, but I don't believe it's an investment. And my key point there is, you look at Bitcoin, 21 million Bitcoin in total.
Bill, and on that note, because we're running out of time here, but that's all fantastic.
It's
We'll
always
leave you
too
with just
short.
one nugget, Bill. One nugget. If you're looking at doing a Warren Buffett type investment, and this is investing, not trading, I'm just going to have Terence put up my screen because you need to kind of have a look at Cognizant. This is one stock that I have been researching. It has piqued my interest, and it provides digital transformation services to healthcare, and it is looking very scalable. And as you can see there from its share price as well, it has a very strong upward trend there from a technical analyst point of view. Cognizant is using technologies that harness blockchain to provide these services that are going to change the face of healthcare. It's already changing over in Asia. I'll be there in a few weeks' time. If you want me to talk more about this, I can in the next show. But we have to let Bill go now to his proper day job. Bill, thank you so much for being with us. We've got
always a delight.
We've got Piers coming up next, so stay with us and keep those questions coming. Slam the like and subscribe button if you would like to have more of Bill and, of course, more of Joachim Piers on. We really appreciate it, so don't just sit there.
Give Piers my best regards.
I will do. Yes, if you want to hear more about Piers' views on CoreWeave, and of course he talked about Intel a great deal before the news yesterday, stay tuned.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
The question is now, because Google have now got the bit between their teeth, and they're coming out with their new phone, which is basically an AI masterpiece, versus Apple, who are still flailing, apparently doing a deal with Perplexity and Anthropic.
If they get the deal right,
if they get it right,
the stock's 260.
Yeah, even if it sounds right, because that's the way this market works, right? The market is is buy now and ask questions later, right?
We have a lot to cover
Yeah, I mean, listen, the market is just rotating and grinding, and the shorts that continue. I mean, the options market just shows you how confused everyone is at an index level. I mean, every day I speak to my options guys, and implied vol is, the puts and the calls, they're all over the shop. They go from cheap to expensive to fair value, and ultimately no one really has a clue. And the bearish positioning that continues to mount up just keeps getting ground out, and it's healthy, right? Palantir and NVIDIA and Broadcom are no longer leading this market, right? There's other names that are leading this market, and all the names that we've talked about for months now that were unloved, names like Google. We didn't talk about Oracle, unfortunately, but that's obviously come to the table amongst many others, right? Micron, of course, is leading. I mean, that's just exploded. I mean, that's just an extraordinary inflection story, that one. I mean, now they're trading on a ridiculous overbought level, 85 RSI. I mean, Google's on 88 RSI, by the way. Last time it was that overbought was in 2016, I think.
It's had a quite a positive run of news stories.
It's been just a perfect run from the ideal situation being underweight, unloved, just sitting there doing nothing. Everyone's like, what should I do with Google? Are they going to lose their search business? We discussed it on the show.
Yeah.
To great numbers, people changing their mind about the AI and realizing that they are actually the AI kings and they'll be fine, to upgrades, to antitrust being backed off, to just a multitude of things. And then and everyone's gone from underweight to overweight in a short period of time, which of course has caused the stock to go completely parabolic.
So you can see it there, the move from 200 to 250. I mean, at what point,
look at that move,
is that excessive? So that
it's the $1 million question, isn't it? I mean, the fact that we're talking about Google as where's the excessive move based on the fact that 3 months ago that no one wanted to even touch it.
There was zero interest.
But this is what the market does, right? It finds the high quality companies that haven't been loved and it rotates into them.
Or is it desperate to find anything?
Maybe, I don't know. Listen, this market is what it is, right? It's exuberant. It's overheated. It's ignoring every other thing, right? There's plenty of reasons to be excited about this tape, but there's also plenty of things, in a normal world that would be,
terrifying.
Cause for some, at least taking a breath. I mean, look what's going on in the labour market, right? I mean, labour market's cooling. We all know that. Mm-hmm. It's an open question as to whether it's cooling too much. Then, of course, we've got the Fed tomorrow night. What are they going to say? What are they going to do? The market is obviously anticipating a cut and then guidance of 2 more cuts, I think. But, at the end of the day, there's plenty of things to be concerned about. But the market just doesn't care, and it hasn't cared for a long time. And it's frustrating for those of us who, have been in markets for 20 years plus and expecting some sort of volatility at some point. But there's a lot of money to be made. I could have made a lot more money if I hadn't had hedges on, but nonetheless, still making money in the books that I run.
That's
just trading in and out of things, really nervously in and out. You've got to be disciplined.
And I think some people, we're getting to levels now where some people will think, what's the point in hedging? Why they'll see gains, they'll see things like Oracle, and the moves are so big that they'll chase and they'll lose discipline. Because if you think it can't go down, then January 2018 taught you, then you short vol.
Yeah.
And when you're short vol at these levels, because the market goes up every day, 20 basis points, 30 basis points, that's when you get an absolute smash in the face.
Yeah, listen, it happens every now and then, right? And it's amazing when the market loses its bid, it loses its bid. And if you're in the very liquid stuff, you're fine, you can get out. If you're in the illiquid stuff, not so much. But it's just the problem is that trying to sell it before that happens is just it's a mug's game, and it hurts. And I speak to retail people all the time now because of this TikTok thing that I'm doing, right? And it's fascinating to listen to their mindset. Thousands of people talk to me every single day, right?
I gotta say thank you for yesterday, because you put out a video in the morning usually about 11.
I do sometimes. Usually I do one morning, especially if there's something to talk about, which there always generally is.
And the reason I mentioned TikTok is, of course, because it looks like Oracle will be buying the US part of the business.
Yeah, if that happens, I mean, it's quite extraordinary. I use the word extraordinary for Trump stuff all the time, but is it really extraordinary? Nothing's extraordinary.
It's just ordinary
It's
now.
just another day in the office, right? I mean, no doubt Larry Ellison's having a great time right now, taking over Musk's position as the richest man in the world. What's he got? 44% of that company? That's insane. So he's obviously mates with Trump, and they've obviously had a hell of a lot of lunches and dinners talking about this before. I have no idea how that fits into the business model. Who cares? Does it matter? I don't know. All that matters is that
they host it at the moment.
Yeah, of course, sure. But I mean, it's not the natural fit for a software company to be buying TikTok. Or maybe, I don't know. I don't even know what's real and what's not real anymore.
So do they get some kind of meta premium? Because they're now the main challenger.
I think we're in the middle of the re-rating right now. Yesterday's news and this news is obviously just yet another thing for everyone to get their head around.
Yeah.
I suppose.
But sorry, you've already had. Well, you're going through a re-rating for the core business, but is this an additional re-rating because it is now has a meta?
Well, it has the social. Perhaps it has the social media valuation. If that's the case, I'd like to see what the deal looks like in terms of how the revenues will hit their numbers. But let's assume that is now baked into the rating of this company.
Well, Trump will
4 times forward earnings for Oracle makes them dirt cheap. I mean, let's just quickly put that in perspective. Their top line revenue is 55%, right? For 23 times forward earnings, which is pretty much quite cheap actually in the way that's mega cheap. That's like 100% too cheap. It's 400% cheap if you want to talk in the Palantir language.
Yeah.
Right. And why is Palantir's business better than Oracle's business? Mark Benioff the other day was on CNBC saying, I'm very envious of the premium the market pays for Palantir's business. We don't have their growth profile, but even if the market applied the multiple to them, to us that they did to them, we'd be like 300% higher. But and he was applauding it, but I was at the same time like, okay, but why is it anyway? So I've given up on Palantir. We made some money out of the short. I'm just stepping aside. I can't be bothered anymore.
Right, Boise is saying he is loving all your TikToks.
Oh yeah, he's on there, is he?
Just you got hi guys.
Is that what he's saying?
Give us your intro. What's your intro? Come on.
Hi guys. Yeah, you love that, don't you? I'm talking to them.
Hi guys.
On a personal level. Hi guys. Good morning.
It's got a lot.
You love
of that.
it,
especially when we were on holiday when you were,
Yeah. But that's all by design, right?
Yeah.
In the Hamptons with the Top Gun hat on.
The Top Gun hat's very cool. Right, we've got a lot of questions coming in. So, can we please run through Plug? And,
yeah, sure.
mRNA and then also Qualcomm.
Yeah, great. So Plug is kind of, excuse me, Plug is kind of consolidating, which is unusual in recent times for this stock. Every time it sells off, it's supported. The technicals are still intact. I bought some back yesterday. And I've been trading around. My hope, and there's nothing that's really changed too much in this story.
Yeah.
I suppose the best thing they have going for them at the moment is that a lot of the junk stocks are starting to catch a bid. It's just that the focus has been on quantum and AI and nuclear fission and all these other sexy areas, and not so much on hydrogen. But
so just a reminder for everybody who's just tuning in for the first time hearing about Plug, a quick snapshot of what they do.
So Plug Power are a hydrogen fuel cell company. The best way to describe what they do is their customers like Amazon, Walmart, Costco. They make small hydrogen fuel cells that go into the warehouse forklift trucks, for example.
Right.
And they've got other applications around the world. They have a contract with Volvo as well. Listen, if you rewind the clock, this company was going to be a darling. It was trading at $65 a share and going to 100 according to Citron, the biggest short seller in the world.
Yeah.
Now we're trading at $1.50. Balance sheet problems, regulatory problems, and just a lack of growth really is the problem. But the short interest is 32%. It's a short squeeze stock. They've improved their balance sheet. They've improved their customer base. The regulatory situation has improved for them because they do get the tax credits. Mm-hmm. Solar didn't, they did. So there is a base under the stock now. And I think it's just a matter of time until it has a squeeze up to $2.5, $3.
But with a high risk warning.
It's a very, very high risk stock. So you keep a low position and a tight stop loss.
Market comes off. This is probably $1.20.
Yeah, potentially, yeah.
Right, next one.
What was the other one? We said Qualcomm.
What do you want to do? Yeah, Qualcomm.
Qualcomm's a fascinating company, right? These guys are one of the only large cap semiconductors that are still very cheap and very unloved versus the market. I've loved Qualcomm for many years. They've been involved in lots of antitrust because these guys piss a lot of people off because they own the intellectual property that everyone's hostage to. They are the brains of all of mobile phones, whether it be the Apple phone or the Samsung phone. MediaTek in Taiwan is the only other company in the world that make chip modems for phones. Wow. But they're nowhere near as powerful as the Snapdragon. Look at the Mercedes F1 car, it says Snapdragon all over it, right?
This is Nick Feingold's starting to like this stock as well.
I mean, I've loved this stock for years, but it's a heartbreaker. And the reason why that is because they're still too slight. Their AI business, it's all about AI, right, and growth. These guys are similar to Broadcom, but more so. They're weighted heavily in the smartphone business, right, which is a low growth business. Yeah. Their AI business is slowly catching up. And don't make no mistake, these guys are the brain power of the semiconductor world. They're very arrogant. They say that they invented 4G, which they pretty much did. They invented 5G. They're very arrogant. They piss everyone off. They've got antitrust all over the world. Very cheap, high quality cash cow. But they just need to get that revenue growth going again. I think I love it, but it's just I want to see it.
Yeah, it's one of those ones that we'll look back in 3 months and say, oh, remember when we talked about Qualcomm.
Having said that, for me, I've got a lot of history with this stock. I've been saying this for a long time. But we're at the inflection point in AI for a number of companies. Marvell, Qualcomm are two great examples of stock. Micron 3 months ago, but now that's got the value being baked in. Yeah. These guys are unloved and high quality.
There was M&A at one stage, wasn't there?
They've done a lot. The Qualcomm bought, and I'm just trying to remember the name of the company. I should know. I was just thinking about it. I've had a mind blank. Yeah. It was a while ago. It was quite incon. Yeah, it was a UK company, and it's really annoying me. Alphawave. Alphawave? Yeah, I think that's the name of the company. It's a UK company that helps, and this is a great example of how they're getting into the data center, which is what they want to do. It's Alphawave, are a UK company that specialises in speeding up the transition of data in the data center. They bought them for that reason and for that initiative. So there's a lot going on in Qualcomm that's very exciting. It's just a matter of the market actually appreciating it. So I like it a lot. What was the other one that they just mentioned?
Well, we mentioned Marvell, didn't we?
So, Marvell, yeah. I mean, look, it's had its sell-off. Those of you who owned it, I actually didn't own it into earnings because because I hate owning anything into earnings, and I basically got lucky because it sold off. But bought it back at 62, whatever it was. I'm just going to hold on to it unless there's a reason not to hold on to it, right? I mean, you've got to be respectful of the price action. It doesn't. It's kind of just sitting there doing nothing.
Yeah.
Nothing. No one knows about. No. Again, just to give you some feedback from the retail world of TikTok. It's amazing how many people have come back to me on this particular call. Out of all the things I've mentioned, this one has had the biggest reception.
Right.
Hundreds and hundreds of people have come back to me and said, "Love that call. Totally agree. I'm in this for the long run. Wicked." Like it was.
I must admit, I do like it.
Overwhelmingly strong, which goes to show you it has a big retail following, not a big institutional following, and that's why it has massive rallies. But at the moment, the retail crew are just quietly sitting there, not doing much about it. When I say retail crew, it's the US guys you really want. But they do need to deliver, right? And just to put it in perspective, their revenue growth was 58%. 58%, and they're down 2% on earnings. I mean, it's a bit much if you ask me. It's the bottom line that's the problem, right? They need to be improving those margins. But for me, it's just a matter of time. I'll stop loss at 60 or whatever, and just sit with it.
I think Morgan Stanley called it best after the results. They said, "We keep on saying that this stock is going to have a big move up because of X, Y, Z, but every single quarter we're disappointed."
Yeah.
So we're still waiting for it.
Well, exactly. I mean, listen, I've seen this many times before in Marvell. Marvell's like AMD on steroids. And what I mean by that is that AMD has moments in the doldrums just recently. I mean, I was on the show 6 months ago and no one wanted to buy that thing. It's now 100% higher. Yeah. It's a battleground stock that has its ups and downs. Marvell is like that, but more. And so it's kind of in one of those moments right now. I just think it's not a trading stock. I just whack it in the book, forget about it, and put a stop loss, and don't worry about it. And for the time being, there's other things to trade.
Like CoreWeave.
Like CoreWeave, which is spicy as hell. I mean, listen, buying the dip on this thing, which I did, and then of course sold it too early like an idiot. Now I'm a bit confused as to what to do, but the news flow changes almost daily in this stock. So prior to yesterday, we had 2 upgrades, 1 downgrade, a big bear report out, detailed report on how they think that the GPU rental business is a bit of a scam, not a scam, is a little bit of a fad and too capital intensive and ultimately not going to lead to the margins that they want. So there's lots of short sellers circling on this stock. Remember that, because they've got a lot of debt. So, you know, unlike some of these other companies, Palantir is actually the same.
Short sellers just don't believe in the model, do they?
They don't necessarily believe in the model. They don't like the balance sheet. They don't necessarily believe in the model. But there's loads of bulls as well. Plus, it's a retail favorite. Plus, and you've got to remember, retail favorite. There's options activities massive. The moves are 10% on a piece of news, not 5%. Yesterday's a great example. NVIDIA have just signed a new deal with them. Remember that NVIDIA are obviously in bed with them already. Yeah. It's a $5 billion deal. Over 2 years, I think it is. It's a big endorsement for the company. It's obviously, reiterates the business model and the revenue streams. And I think that it's at a technical, from a technical perspective, it obviously needs to break out. Listen, I'm not committing to this right now. I'm just trading it. So if it, I think it's got another 10% to the upside, maybe in the near term. So I'm just kind of trading it. But I think if you step back from it, I am bullish on it. But they do need to fix their balance sheet. They can't run $13 billion worth of debt. What's the market cap as of yesterday?
Fundamentals, we are on $58.6 billion US dollars.
Okay, so there we go. So that's, I mean, that's not necessarily a massive market cap to debt ratio compared to some other companies, but in terms of big companies, that's quite a lot of debt.
Question from our good friend Pelican. Would you rather spend $2,000 on an Apple phone or invest in their shares? Now, you have absolutely nailed this one, because this was your call 2 months ago, 3 months ago at 190. And, it must have been, 3 months ago. Time flies. 195, you called this, said it's going higher. And higher it has gone to 235.
And this is a great example of the reason why I said it was going higher is because it's a positioning story. It was the same reason I thought Google was going higher. The only difference is Google's had loads of good news and these guys have had loads of lukewarm news. And look, it's still higher. Yeah. Right? And the reason why it's higher is because the market has rotated into the high quality companies that are unloved. It's as simple as that. There's no good news. Their new Air phone that they just came out with was, if you ask me, it was a flop. Right, they've got less battery life. It's smaller. It doesn't do as much stuff, although it's apparently easier to use. No one cares. All they care about is, are you going to make up the gap, the chasm between you and the AI guys? The question is now, because Google have now got the bit between their teeth, and they're coming out with their new phone, which is basically an AI masterpiece, because they are the AI kings. Versus Apple, who are still flailing. Apparently doing a deal with Perplexity and Anthropic, but to be confirmed what that deal looks like. So in the meantime,
if they get the deal right,
if they get it right,
the stock's 260.
Yeah, even if it sounds right, because that's the way this market works, right? The market is buy now and ask questions later, right?
Yeah. And I think it comes from the president.
Yeah, amen. But I struggle to love Apple in any way, shape, or form as a stock, but that doesn't mean you can't trade it. And I actually don't own it anymore, but maybe I should, purely on the basis of what I just said.
Yeah. What the hell happened in Tesla in the last few days?
Gosh, I mean, that's the ultimate, right? I mean, this is a great example of what goes on with Tesla. So Musk bought $1 billion worth of stock, hit the tape. That was 7% yesterday. Dan Ives,
your best mate,
banging the drums, saying that this is a $2 trillion company. Nothing new. Nothing new. There's no new news. There's no fundamental.
Not the cars.
Definitely not the cars. I don't even know. Do they sell cars? I don't even know whether they sell cars anymore. No one wants them. The cars are literally irrelevant, which I find. Don't you find that quite interesting, right? They don't have any revenue from the stuff that they do care about, and the stuff that they don't care about, the revenue's declining. Yeah. So, but it doesn't matter. Musk bought $1 billion worth of stock. This is not a stock. I never trade it. I'm never touching it. If people ask me about it, a gun to the head. I think the way this world works, you just want to be long and a small amount of it.
Short it, can you?
You can't short it. Forget about it. There's every reason to short it, and you can't.
Did he just get paid? Was it 6 billion? How much did he get paid?
The new pay package has taken over the space of, and I forget the time period. I want to say 10 years. Is $1 trillion. $1 trillion.
But how much did he actually just cash out?
I don't know.
A few months ago, because that's what he's done. He's taken money out of the company,
and then just bought stock,
and used maybe 20% of it to buy stock.
So if you could buy $1 billion worth of a stock, right, and then it goes up 7% based on that bit of news, and then you just knock a few out, right? That's quite a nice little business model. I'm going to get to that stage soon on TikTok. No, just joking.
That's exactly what he did with Bitcoin.
Yeah, I mean, but listen, this is just a fascinating story that I find impossible to trade. If I had to do something, if someone forced me to do something, I would own a small position and just not think about it. I would definitely never short it, as much as it's tempting. But it doesn't live in the real world. It lives in a fantasy future world, which may or may not be fantastic. Who knows? I don't know.
ASML.
Oh yeah, let's definitely talk about that. So ASML is a great example of the rotation that we've been seeing. So,
do you want the European or the US?
The European, the US one's so illiquid.
Okay, right. So I mean, it had bad numbers. Well, they just didn't give guidance, and then suddenly,
again, this is yet another example, right? And this is I am long, and I was long, and I remain long. The reason why that is, one of the top companies in the world. We all know it's high quality. It's been hibernating, unloved because of the lumpy orders and the regulatory concerns. Then it gets to a certain point where, I mean, the last update from the CEO, just to be crystal clear, was we have no idea about guidance.
No.
Basically, he said this is awful. Was basically what he said. Right? Went down, and now we're 20% higher. Rotation into the high quality, unloved names in the market. Rotation out of the crowded stuff in the US, like NVIDIA, into ASML. Market in general picking up, and of course the clarity on the US-China chip deal, which means that potentially the orders might come flowing back in. And of course, suddenly this is an AI story again. It wasn't before. Oh, they also bought what's it called? This is going to really worm. Mistral, which is the one of the only European AI companies.
Right.
They bought $1.3 billion. They bought a majority stake in them last week, which is a smart move, because and Mistral was set up by the Google and Perplexity alumni, and it's one of the only. It's obviously not listed, just like every other good company in Europe. But it's a smart company, pure AI, and they now own a majority share in it, which I think is also quite smart, because it's added a little bit of an AI tinge to the story.
Yeah.
It's all just hot air, right? I mean, nothing's changed. It's just up 20%. It's the way it works.
They put the artificial in artificial intelligence.
Correct. But they're welcome to the market. Yeah.
Fed tomorrow. So we had a poll earlier, and we asked, do we get a 25 basis point that's dovish, 25 basis point hawkish, or 50? 50% of our viewers say it's going to be a 25 basis point cut with a dovish tint in the press conference. 32% think hawkish, and only 10% of people are saying it will be 50 basis points. What's the call?
I think that based on everything that we've just seen, everything we saw from him last time, everything we've seen since, I think it'd be very unlikely it's got a hawkish tinge to it. Also, let's just not forget, a hawkish tinge would be a shock to the market. Mm-hmm. He hates shock in the market. I mean, if 9 times out of 10, he helps the market go higher.
Yeah.
I think it'd be very unlikely that we see 50 basis points, because I think that would be him tipping his hat to Trump, and I think he can get away with doing 25 and a dovish conference call, press conference, rather than doing 50 and then talking it down, which is what. So the question for me is, but what does he say about the labour market? Is what I want.
Well, that's it. Does the data allow a dovish?
I think it does. I think the data is actually quite poor. I mean, it depends what you look at. But
if we talk about, in his words, we are balanced in our targets. You think he'll lean more towards the unemployment rate, job situation, so that it won't be balanced?
This is the tricky one, right? Because his mandate, the thing that him in particular is so laser focused on, which is his mandate, is the inflation number, which is sticky, right? But it's not it's also not that bad. Like, look at the PPI, right? PPI scared everyone, and then it was miles lower, right? PPI, by the way, is a high frequency, noisy number. But look at the core. The core's not a prop, right? It's sticky, but it was lower the other day. From an inflation point of view, it's like, I'm not sure. But I think that the other part of his mandate, of course, is the labour market, right? And I think it's going to have to be mentioned.
Yeah.
But I just think the stage is set, and that's why the market's also rallying, getting so excited. I think they can see that he's now kind of backed into a corner a little bit, because he did his pivot. Now it's his time to actually pivot. And is he going to stick to the same vibe that he said that he did 3 weeks ago? And the answer is probably yes. And if he does that, the market's probably going to melt up again.